He's a PwC member by proxy, and they're specialists in the field. They're going to be educating us on what we need to know and the importance things we need to know concerning the law taken by one of our very special speaker. She's one of us in PwC. She's a senior tax accountant. And I'm just going to do a brief, just going to read a brief profile of hers, and then I would just hand over the floor to her. Now, before she speaks, let me just give us a breakdown of what she's going to be talking about. And this is not unconclusive. She's going to be talking about taxes on business and investments, basically how the new tax law reforms affect companies in Nigeria. She's going to be explaining issues relating to the exemptions that the tax provides, VAT, the capital gain tax, and so many other things. And she's an astute, like I mentioned, tax accountant. Her name is Mrs. Yewande Fowosere. She's an accomplished senior tax accountant at a leading agro-allied company in Nigeria. She brings a strong foundation from her previous experiences in working in consultation firms. She specialized in tax regulatory affairs. She possesses extensive experience in representing individuals and companies during engagements with key regulatory bodies. She's worked with the, in consultation with the FIRS, which is the Federal Inland Revenue Service, the multiple state tax authorities, the Industrial Training Fund, which is the ITF, and various other tax and levy-related agencies. She specializes in navigating complex tax landscapes and in ensuring compliance for both corporate and individual clients. And so I want us to receive our guests, our first guest speaker for tonight, Mrs. Yewande Fowosere. Mrs. Yewande, over to you, ma'am. I think that, okay, because, I think she must have, she was online. I think probably the network.
Maybe it's her network. Yeah, maybe
yes.
It's her network.
Let's just give her a minute to sign back in. Okay, she's back. She's back online.
She's online.
Yes. Mr. Yewande, please, over to you.
Okay, good evening, everyone.
Good evening, ma'am.
Can you see? Can you see? Can you see my video? Adenike, can you hear me?
Yes, we can hear you.
Good evening, everyone.
I think the network is a bit bad. Yes, we can see you now. Yes.
Okay. I will just share my screen. Okay. Okay, please. Can you hear me?
Yes, we can hear you. Yes, we
Yes,
can
we
see
can
your
hear
screen.
you. Yeah, yes, we can see your screen now.
Everyone, I say big thank you for the privilege to share my knowledge and wealth of experience with us here. So tonight we'll be talking about taxes on businesses and investments and how Nigeria's new taxation reforms affect companies in Nigeria. Okay, so it is no longer news that a new tax it's no longer news that certain new tax act would take effect from 1st of January 2026, and there is so much noise about it in the media, some the positive, the negative, the truth and falsehood. So it is important that we actually understand what the law is trying to say, what it is trying to achieve, and begin to set our mind towards compliance. Because the transition is aimed at streamlining administration, broadening the tax base to include the informal sector, to increase revenue generation by eliminating taxes on the low income earners, reduce taxes on the medium income earners, and to marginally increase taxes on the higher income earners. And these are the words of Taiwo Oyedele himself. So the tax transition is also to ensure that Nigeria is in global compliance with there are certain standards that it is expected that before they will regard you that the country has to align with. So have a basis to understand the differences that the new tax act is bringing in place. So because we are talking about how it affects businesses, so I'll be talking from the perspective of CIT, that's the company income tax. I'll be talking from the perspective of the value added tax, that's the VAT, and I'll also be talking about WHT, and that's withholding tax. So before the implementation of the new laws, the company income tax is the principal legislation governing taxation of companies in Nigeria, and it is administered by the Federal Inland Revenue Service. And from January 25th service, this is to make it all encompassing. So previously it was just federal, but now it is bringing the new tax act has brought on ground a lot of collaboration between the national and the subnational tax authorities. So we're expecting to see a lot of collaboration with them, and this is to also this the major reason why they are doing this is to close whatever loopholes that may be in the tax system. So CIT is imposed on the profits of a company for each year of assessment. So in Nigeria, the businesses are held for a year, for 12 months. So some people may have their year end for December, February, and the likes, but the Nigerian tax system uses a January to December. So a company in Nigeria can be a Nigerian company that is registered in Nigeria, and based on the residency rules is resident in Nigeria, and it can also be a non-resident company. And a Nigerian company under Kama is a Nigerian company is any company incorporated under the Companies Allied Matter Act or any corresponding law enforced in Nigeria, as well as any law that is in tandem any law that and branches outside Nigeria, known as worldwide income. So the next one, we are talking about the non-resident companies area. This
Apologies, just I think our network is a bit having some issues. She's okay, she's back online now.
Okay. I'm so sorry. My network took me out. Can you hear me, please?
Yes, we can.
Okay. So as I was saying that I'm trying to create a foundation so that we can understand some of these things, some of these terminologies when we begin to dive deeper. So under the current framework, okay, so this one is talking about how non-resident companies that are not resident in Nigeria, how they derive their profit. And so under the current act, the Company Income Tax Act, that's known as CITA. So there are three rates. So we have 0% for small company, medium company 20%, and large company 30%. So for small company, 0% was pegged at a turnover of 25 million, 25 million or less. For a medium company, that's 100 million, between 25 to 100 million, and for a large company above 100 million. Then companies are allowed to claim capital allowance on their qualifying capital expenditure. So they can claim initial allowance and annual allowance, and this allowance rate for industry building, and it's also a different rate for furniture and fittings. So there are certain exemptions and incentives that CITA provides under the old tax act, under the old Company Income Tax Act. And for small companies, like I said, that makes a turnover of 25 million or less, it was zero. Primary companies that deal in agricultural sector, they are exempted from minimum tax. So that is any year where they make a loss. So the Tax Act says that any year where a company makes a loss, they are assessed to minimum tax, and there is a formula for computing minimum tax. But for small companies, for agricultural companies, they are exempted. So for under CITA as well, companies are exempted from taxes on dividends that they receive from a Nigerian company. There was the pioneer companies, where companies that were involved in certain activities like tech or anything that was new in the country, where they were exempted for profit for a minimum of 3 years, and an extension of another 2 years when they elapse the 3 years. That makes it a total of 5 years. Then the companies that are into exports are exempted from profit, provided that they meet certain requirements, such as 80% of what they produce must be exported. They must repatriate their funds through approved channels, or they may use it to buy equipment and the like. So these are some of the incentives that CITA provided. So I've talked about minimum tax. So this is for non-resident tax companies as well. So under the new Tax Act, before we mentioned that it was three rates: 0, 20, and 30. So for now, it is now 0 and 30. So so those that are on the 0 rate band are known as small companies, and these small companies will have a gross turnover of 100 million or asset base of 120 million, whichever comes first. So if you're a company, or you run a business and you have assets that you use in your company of about 120 million, you would then be assessed to 30% and not 0%. So if you also, when you cross the 100 million turnover threshold, you also be assessed to 30%. So large companies are those that will be assessed to the standard 30%. Yeah, so that's the new change that has come from the Tax Act. From what that's I told you that the reason why I talked about the old Tax Act was to make a basis for comparison, so that we can see the changes that have happened. So And before, under the old tax act, we had several other taxes and levies that companies paid based on the industry that they fell into. So if you're in manufacturing, agriculture, you would pay something called the tertiary education tax, called EDT, and it was at 3%. And then companies would also pay something called a tax called the police trust fund levy, and that's 0.05% of net profit. So under the new tax act, under the NTA 2025, that will no longer be. So companies like banks and telecommunication sector will pay something called NITDA, NASENI. There were quite a host of them that companies will pay that were just basically a duplication of taxes. And some companies were paying up to about 40% when you put all of these taxes together. So the NTA is saying, so what we are saying is all of these things, we are putting it together into one charge, and that's called the development levy, and it's going to be 4% of companies' accessible profit. So accessible profit is arrived at after adding back non-deductible expenses, lessen non-taxable income. That's how we arrive at accessible profit. So basically, and the new tax act also makes provision for to reduce that 30% to 27.5 and to ultimately 25% based on the approval of the Senate and the assent of the circular from the Office of the Presidency. So we expect to see that in the years to come. And we'll talk about capital allowances. I mentioned previously that capital allowances will charge were allowances that were entitled companies were entitled to on their qualifying capital expenditure. And I mentioned that we had the initial allowance and annual allowance. Initial allowance was usually enjoyed at upon the year of purchase. It's one off. Annual allowance is over the lifetime. So the new tax act then says, see, no more. There's nothing like initial allowance anymore. So, and there's nothing like annual allowance. So it's just going to be a uniform rate. So the rates are stated, the rates are available, and it's just one single charge based on the asset class. So if it is car, if it is motor vehicle, there is a rate for all motor vehicles for all companies, and that single rate will be charged one off on a straight line method, right? To be charged on straight line method for the number of years for which, based on the asset class, like I said. So this means that companies will no longer receive a large upfront tax benefit in the first year of purchasing an asset. So they are trying to spread it out evenly so that when they purchase assets, and this is just a way of curbing tax planning that tax consultants or tax advisors are known to use uh, as a way to avoid tax avoidance. Now, not tax evasion. Tax avoidance is using the loopholes in the law to maximize to minimize the tax payable, and why tax evasion is illegal, is a crime, and is punishable under the law. So please, let's avoid anything like that. And capital allowance. So before you can even obtain the capital allowance, so previously VAT when was not enjoyable, was not how would I put it? So when companies buy assets, they pay import duties when it is imported, and they pay VAT when they purchase in Nigeria. So when they import, they pay VAT too as well. So the tax law says, see, this is not you're not going to enjoy this VAT, you're not going to claim it back. You can't claim it back, or you can't net it off against your output. Can you hear me? Can you see me?
Yes, we can hear you.
Okay. So you're not going to be able to claim it back under the old tax law. But now VAT, the new tax reform says, so when you purchase vehicles, when you purchase fixed assets, whatever it may be, you can claim back your VAT. So previously was supposed to be capitalized and added back as part of the cost of the asset, but now you can claim VAT back. And so what is this trying to help companies to do? It's just to help them improve their cash flow. That's just basically what they are trying to do here. Say, see, whatever you pay, you can claim it back to just improve cash flow. Then certain companies were restricted to 62 to third. So when you have capital allowance based on the assets that you have in your business, you cannot claim everything in a particular year. It is restricted to 66% of whatever capital allowance you have for that year. But now certain companies can begin to claim it in full. And before, capital allowance, regardless of whether the assets were useful in your business or you were using it. Okay, so companies may have different streams of income, 2 streams, 3 streams, as the case may be, and some may be activities that are not taxable under the law. So previously, regardless of whether that income was taxable or not, and you were using one asset for everything, you can claim all capital. As the law is saying, no, that's not going to be. As long as you are not going to be able to pay tax on that income, and if you use this asset to generate that income, then what proportion of your income that non-taxable income represents, you're not going to be able to claim capital allowance for it. So say for instance, you are in a business that the ratio of your taxable income to non-taxable income in your business is 80-20. So on capital allowance, you can only prorate, say you can only enjoy 80% because that is that portion where you're going to pay tax on. So that is that for capital allowance. So there's something under the new tax act that is the minimum effective tax rate, and it's a minimum rate of 15%. So for companies in Nigeria that have a turnover of 50 million and above, you have to pay at least 15% of your net income as taxes. So how do you arrive at your net income? Is your net profit minus 5% of depreciation, minus 5% of depreciation, right? So that's how you arrive at the net income. And so if you make if what you pay in taxes is less than 15% of that net income that I said, you would have to recalculate and pay the difference that makes up to 15%. That's what the law is saying. And so for multinational companies as well that have a global presence, and the law says that you must pay 15% if your global income, like your group income, is 750 million euros and above. This is already existing and is part of the BEPS policy, I think Pillar 2, to just reduce what's it called, profit shifting. So moving your profit from a place of higher income to a place of lower income is another form of international tax planning that companies do. And so Pillar 2 came and said, see, going forward, you have to pay at least a minimum effective tax rate. So if what you pay is less than 15%, the law is saying you recalculate and you pay the difference in taxes. Then so the new tax act also makes provision for companies to enjoy certain privileges and benefits, for operating in certain industries. So this is one of the most critical structural changes introduced by the Nigerian Tax Act, and does not grant a tax holiday. So previously, pioneer status would say you're not going to pay. Okay, let me say it this way: pioneer status was repealed for economic development tax incentive to come in. So it's just like, say, I remove pioneer status and I replace with EDTI. So previously under pioneer status, what obtains is that companies that are known as pioneer, that have pioneer status, would not pay taxes. But under economic development tax incentive, they are not saying you would enjoy the same privilege, but it will be that you will get something called tax credits. So which we would use to reduce whatever tax you're supposed to pay. So you would do your business normal, you would prepare your financial statements, you do your capital your tax computations, you'll be assessed to tax, but you would have tax credit that will be used to bring down whatever it is that you will pay as your tax liability. So the benefit is a calculated tax rate of 5% per annum of the company's qualifying capital expenditure incurred during the priority period. This includes capital spent on assets, and then this credit is then used to offset the CTI calculated for that particular year. And to enjoy CTI, your activity must be in certain priority industries. And so we'll talk about other incentives that the Nigerian Tax Act brings, and that's the agricultural and export promotion. So certain companies in the agricultural sector will enjoy tax exemption for a period of 5 years. Similarly, profits from manufactured goods that are exported, they remain exempt. Recall that I said previously that companies that engage in exports, they have certain benefits, and the NTA retains some of those benefits. Then previously we had it is global standard that companies usually engage in research and development. Previously in Nigeria, it was it was a percentage of profit. Now the NTA is saying, so we are trying to be compliant globally and follow global standards. It is no longer going to be a percentage of profit. It's not going to be 5% of turnover, which is a good one because it's a form of improving cash flow for companies. Then this is under pay, so it's talking about companies and their staff. So there are so many incentive for companies before. There is ITF, where you pay industrial trust fund, I think, and once you pay, you're able to claim 50% of whatever it is that you spend on training. There is the NSITF for accidents and workplace accidents that may happen, where you can claim, where it's sort of like an insurance. So, and I'm saying aside from that, so if you recruit, if you employ people, and you within certain age brackets, and you keep them in your company for say another 2 years, there is a benefit that that you can get from the government, which is also a form of tax credit. So so this is basically all on CIT. I've talked about VAT. Okay, so let me just mention VAT in passing. So under the new reform under VAT now says that previously we had VAT was only allowable on qualifying input. So you are into, so let's use Orekelewa's business for example, coconut oil, and say she buys coconut and process. Please, a minute, please excuse me a minute, please.
I think our speaker will be back, but just in the meantime, if you have any question, please kindly put your questions in the chat box, and so she will be taking the questions at the end of the, because we have two speakers at the end when our second speaker finishes this session, then we'll take all the questions. So please, if you have any question regarding what our first speaker is talking about, which is the session where we are in right now, please put it in the chat box. Same with our second speaker, if you have any question, whether it be it relating to your business or you just have any general question that you need clarification with, kindly put it in the chat section, and she'll be taking we'll be taking the questions from there. I can see that someone already has we already have some questions already. I'll be taking that. So let's just give, I think she's back now.
Thank you, Adenike. So it's just my boys being boys. So I was talking about VAT, and previously VAT was only okay. Okay, okay, I'll just stop sharing. All right. Okay, so I was talking about VAT, and previously I was talking about, okay, I was using Rekilewa's business as an example, and I was saying that, so before previous, what we have currently under the law for VAT is that she could only claim VAT as input VAT on whatever it is that she uses to produce coconut oil and shea butter. And this is a process that made business so expensive, so cost, that made it very how would I put it, high cost, ensure that companies had high costs, right? Because there's VAT is we charge VAT on all taxable supplies of goods and services. So whatever it is that does not fall under inputs becomes an expense that she has to expense as part of the business. But the new law is saying, Nigerian tax, the NTA is now saying that, see, under VAT is not only going to be input. So whatever services that you enjoy, whatever it is that you were charged VAT on for services, overheads, whatever it is, you can now even claim them back as input. So that means that's increased cash flow for companies. So that's that part under VAT. So if, in fact, when you buy assets now, you can now claim your VAT, like I said previously. So WAT, that's what the WAT, and that's the withholding tax for businesses. this came into effect in 2024, and the regulations, or most of what is under the WHC Act, WHC is retained. So what's WHC? That's withholding tax. And withholding tax is not another tax. It's just an advance, how would I put it? Is tax paid in advance. Yes, tax paid in advance. So how does it operate? So when you render services to a company, is the law requires them to withhold a certain portion. So there is a WHT credit, there's a WHT schedule that states different activities and how much it is that your whoever it is that you're supplying to, companies that you supply to or you contract with, are required to withhold. So for instance, contract of supply is 2% for individuals, and it's also breaking down into individuals and corporates, and non-residents individuals and non-resident corporates. So there's a schedule for that, and that law says that. So if you're a manufacturer, so retailer for instance can say, I'm a manufacturer, anytime I supply you, don't be told on my business, you pay me my money in full. That's for manufacturers. But for distributors, it is the law requires that WAT is deducted from their transaction value. So, and another thing that the reason why I'm mentioning this is because there is a requirement in WHT that is not even going to be in full force going forward in NTA. So in the law under WHT, the requirement of the law says that if a business should contract with an unregistered supplier, unregistered non company, this person is not registered with CAC, Corporate Affairs Commission, the person does not have TIN, and you contract with that kind of person, there's a penalty. I think 5 million. There's a penalty, and that's 5 million. So even if you now decide that, okay, I want to do business with this person, you must be told times two of the value. So for instance, the WAT rate should be 2%, and they are saying because person does not have TIN, the law says that you must be told times two, that is 4%. So instead of 2%, you must be told 4%. And where you do not be told, there is an administrative penalty. Previously, you would pay that amount, and they will charge you I think 30% on that sum. And 30%, then they will charge you penalty. That is at the MPR rate, and they will charge the interest at MPR rate, and they will charge you a penalty as well of 10%, I think. So the law is becoming more stringent, and it will be very stringent for those people that are not known to comply. So if a business is one that you don't do taxes before, you just go, you could do your business, you don't care whether you're being charged VAT, you don't charge your customers VAT, you don't be told, you don't keep accurate record of your transactions, of your expenses, you are going to pay very dearly under the Nigerian Tax Act. So what is in closing, in conclusion, so this is my prayers to everyone that is a business owner here. Please, number one, the law says, the NTA now says, I think the Nigerian Tax Administration, and that's the NTA, says that businesses are required to have tax advisors or tax consultants. And for the purpose of business, please, it's required that you have one, because one, tax advisors would help you really interpret the law to you accurately, and help you even understand how to do it in a way that is beneficial for your business without breaking the law. Another thing is that if you're fully compliant under the Nigerian Tax Act, there are lots of benefits for your business. And the Nigerian Tax Act was developed in a way to favor those that are compliant against those that are not compliant. In fact, if you have a tax advisor that is advising you to do the wrong thing, I want you to tell that tax advisor that he or she will be liable to punishment under the law. It is there. That's what the new tax act says. So I am employing everyone to please structure your business. If you don't use ERPs before, that's accounting software, start doing. If you don't keep track of your expenses, start doing. The little expenses that you make in your business, start keeping track. Put a structure, review it, get expert advice. The new tax law is here to favor everybody that is compliant. All right. So Thank you so much. I hope I've been able to add value to us tonight. Thank you.
Thank you so much.
Thank you very much.
Ms. Yewande, it's been such an impactful session, and I'm sure that, everyone on this call can testify to that. We already have some questions, but because of our time, we're going to take the second session, and then after the second session, our second speaker, then we'll take all the questions together. So both the first speaker and the second speaker, I hope, well, she will still be on the call, then they'll be able to answer us. But thank you very much for this session. Now we're going into the second session of today's webinar, and we're going to be speaking to another specialist on tax. He's going to be speaking on the institutional reforms on tax and Nigerians in the diaspora, how they can take advantage of it. Our speaker works with the regulatory body, the Federal Inland Revenue Service. And I'm just going to be taking his profile. And after taking his profile, our guest speaker is going to be coming on. Our guest speaker is Mr. Clement Adesanmi. He's a dedicated tax officer with the Federal Inland Revenue Service with 6 years of experience. He's a passionate public speaker, is a published author, and his work is driven by a deep commitment to personal development, leadership, and youth empowerment. Beyond his professional role, he serves as team lead of Success Rendezvous Foundation, a not-for-profit organization focused on equipping young people with the tools, knowledge, and mindset required to achieve peak performance and excel in their chosen fields. Through his seminars and capacity building initiatives, he inspires clarity, purpose, and actionable success strategy for the next generation. He's an associate member of the Chartered Institute of Taxation of Nigeria, CITN, and is also an associate member of the Chartered Institute of Personnel Management of Nigeria, that is CIPMN, credentials that reinforces his commitment to excellence, professionalism, and continuous learning. And away from his work, his greatest joy is his family. Is blessed to be married to his beautiful wife, Abisola, and together they are raising 2 wonderful children who inspire him daily to live intentionally and lead with vision. PwC, please make welcome with me our speaker, Mr. Clement Adesanmi. Thank you so much, sir, for coming, and over to you, sir.
Okay. Good evening, everyone.
Good evening, sir. Thank you so
much.
much for coming.
Okay.
Yes,
Good evening, sir. Welcome to PwC.
Thank you for the opportunity. I'll start. I'm still having some issues with my laptop. I want to log in with my laptop. I'm still having some issues with it, but I'm going to start so that I can try to manage the little time that I have. And I want to say a big thank you to the PwC leadership. Thank you for the opportunity to be here today. I really appreciate it. I'm not taking it for granted in any way. And to our first speaker, thank you so much for doing a lot. I think maybe we'll have a transfer done for you so that you come into the Federal Inland Revenue Service since you know so much about our job. Well, having said that, I was given the job to speak on institutional reform on tax and capital gains tax. Institutional reforms on tax and capital gains tax. Okay, just give me like 5 minutes. I'll be able to bring in my slide and all of that, please. But in the meantime, I'm going to start so that I'm not wasting the time. So the first thing I'm going to ask is just a general question. This is more of a social, should I say a social poll? Like, do we love the new tax or we've been its biggest critic? Because this is the first thing we need to understand, that just like I love what Mrs. Yewande did, especially towards the end, in explaining the fact that this new tax bill or tax law rather is now a law is beneficial majorly to people who have been compliant with the laws before. It's the people who have never done anything that are like, what, just like somebody who has never done something and yet trying to push the same person into doing the same thing, and there's going to be a lot of resistance, and that's what we've seen so far for a few period now. So this evening, I think CIT was in my thing, so I'm not going to go into CIT. Just a brief recap on what the new tax bill has been about. Was signed into law on June 26, 2025 this year by the president. And one of the things that I love about the tax, even as a tax person, as an agent of the government, is the unification of the taxes that we used to have. We used to have different kind of tax, different type of acts. So you have to read Personal Income Tax Act, read Capital Gains Tax Act, read Companies Income Tax Act. They were all spread across, Value Added Tax Act and all of that. But this brought everything together, unifying them into one, so that once you pick the Nigerian Tax Act, you know that you're reading across board. And whatever it is that you're able to get from there, you're able to understand once and for all. So I'm going to be dealing firstly with the value added tax reforms. Okay, I think my distance is almost done. Okay, so the value added tax reforms, a few things that I want us to notice. First, the value added tax rate remains the same. We're still the same as what our value used to be, which is 7.5%. And one of the things I love to tell people is the fact that 7.5% value added tax rate makes Nigeria the least VAT rate in the whole of Africa. Trust me, you can tell anybody that we are the least paying when it comes to value added tax. Even at the rate that was proposed earlier, which was 10%, even if that was signed into law, we would still remain the least paying value added tax rate in the whole of Africa. I think the next countries, I think they have about 3 of them, are doing about 12%. I think Botswana, if I can remember now, Botswana and 2 other countries like that. I think Egypt. Is it Egypt? But what am I trying to say is the fact that we still have about the least rates in the whole of Africa. So I think I'm bringing this on is not just about the figure, but about a mindset shift, about a mind shift, so that we understand that it's not so much. Tax is what runs any economy. So that's number 1. Number 2, I'm going to be talking about the expansion of the input in the value-added tax. I think Ms. Yewande spoke a little bit about that. And here's the good thing about input VAT. Input VAT has been in existence for a long time, but it was limited to goods bought. For example, let's say we have a company, PwC Grocery Stores, for example. PwC Grocery Stores buys from different other stores goods in the past. The only input VAT, now let me quickly say what input VAT is, so that we have a broader understanding. Input VAT is the value-added tax that a company pays in the purchase of goods and services that are used for production of its own produce or for its business purposes. So, like I was citing an example, PwC Grocery Stores buys from different people, and while PwC buys, there's what we refer to as withholding value-added tax, which the companies can take from PwC. So that means maybe we buy a bunch of banana, for example, and it's supposed to cost 10 naira, 100 naira, let's say 100 naira. The value-added tax of 7.5%, which is 7 naira 50 kobo, is also added to the price, and we're charged all of that. So how we're supposed to get our money back is the profit. Then we now charge whoever we are selling it to the same money. I don't know, maybe we get what we're trying to say now. So by the time we're now remitting this money to the to the Federal Inland Revenue Service, we now say, oh, I sold this particular thing for so much. The value-added tax value or rate, your value of it is so amount, let's say 7.50 naira. But refer to the one I had already paid to the person I purchased it from, which was the same 7.50 naira. So that negates, we have already paid it. Now we have collected it from the purchaser of the product from us. Then automatically we can now, or if we charge more, maybe because our prices went up, we take the 7.5% off, or 7.50 naira off what we are supposed to pay now, then we're paying the balance. I don't know, maybe that is understood. So from there, that was what used to be. But now the government is saying, let's widen this thing. Like one of the things that Ms. Yewande said is the fact that it's to give room to more cash flow for business that are running. And one of the things is that we have input VAT on even machineries, equipment that you buy. So you buy a generator for your business. Before, you cannot claim input VAT on it, but now you can. Why? Because it has been expanded. Now there is more room to claim input VAT on your business transactions. So that is a bigger win for everyone. And let me quickly reiterate what our last speaker said, which is the fact that business, what's the word I want to use now? Business documentation is very important now, because that is what you have to prove anything. Nobody will say, I bought this thing, go and ask. You cannot ask anybody. So it's the business, the receipts, the invoices. Those are the things that shows proof of what our business transactions have been on. So fixed asset has been added, goods, services, every other thing has been added into the input VAT. So that has been a big win for businesses. Now, the one that has been making around, I'm going to speak next on the value-added tax reforms, is the incorporation of the digital economy. I know most people hated this one, especially the online influencers. A big sorry to them. Now, this is what we have to deal with sometimes, because we have people who are making a lot of money but not paying a dime to our economy. I'm trying to look for my this thing on okay. Let me open it so that I can share my slide. I'm so sorry. It's been, my laptop is acting up, so I'm trying to use my phone. So back to what I was trying to say in the incorporation of the digital economy. The digital economy has been existing. It's a huge one. I remember I've been to about 2 different meetings where we're talking about how to tax the digital economy. That's the Facebook, you're selling on Facebook, or maybe you're not even selling, you're just doing influencer. Facebook pays you, Instagram pays you, YouTube pays you, and we know how much of money these people are making these days. And we all remember the story of Pella some few months ago, whereby the Lagos State Internal Revenue Service sent him some tax bill, and he came online ranting and all of that. And we're saying that this is the new normal. So if you're online, there is a mandatory tax identification registration for everybody who wants to carry out business, even online now in the digital space. And every of these organizations that have the platforms that are used, the Facebook, I don't know if LinkedIn pays. I think they pay, I don't know, I'm not so sure. But I know YouTube, I know Facebook, I know Instagram, and maybe other ones. They themselves have been mandated to have an incorporation within the nation now, so that there can be a monitoring on what their transactions are. So YouTube has to be registered in Nigeria, so that when a Nigerian is being paid from YouTube, automatically now the value-added tax is going to be deducted. So they're trying to tax that sector of the economy, because let's be honest with ourselves, it's a big one and almost everybody is going into that space. So there's a lot of money there, and government needs to make their own of it, so that they can keep doing their work. Let me just drop that, don't mind me. So that's about that, the incorporation of the digital economy, and that's really huge. They are trying to do a lot of work in that space. Okay, I'm going to talk a little bit about the exempted goods and services versus the zero-rated goods and services. Okay, so we have exempted, we have zero-rated. I know this used to cause confusions. Even myself, when I started, then like, what's the difference? Both of them are not paying. So what's the problem? But there's a slight difference. When a business is exempted, or a goods or service is exempted, that means that it is entirely outside of the value-added tax system. The seller or producer, whichever word, of those goods and services, or the renderer of those services, cannot charge and is not liable to pay value-added tax. That's that. So it's not, when it's exempted, we're going to be looking at a few of the lists of those exempted goods and services from value-added tax. Then for the zero-rated says that you are still in the tax net, but your goods are not taxable. They are taxable, but at 0%. So it's a different ball game. Like, now we're not saying you are exempted, but you are taxable, but at 0%. So now what that brings now, especially in this new tax law, is the fact that even sometimes someone who is running a zero-rated business can get liability. For example, you want to buy some things, you might get input VAT, and they're saying that you can get back your input VAT, which is a very big thing. It's not been like that before. So once you incur value-added tax on the production of your goods and services, and it's been earmarked zero-rated, then you can get that input VAT back. You're not even paying. So that's a big bonus. It's just like, oh, I paid it at some point, but it's returned or refunded back to you. So that's the difference between the zero-rated and the exempted goods and services. So let's look at a few of the exempted goods and services. We have the basic food items. Basic food items are totally exempted from value-added tax. We have medicals and pharmaceutical products. We have baby products. So I used to advise people, one of the things that you can do, even if you want to start a business and maybe just want to start something, you can go into any of these businesses. They are easier to run with respect to tax liabilities. So educational services too, yes. Electricity. This new tax bill is saying you're not paying value-added tax on your electricity. So we have exports, we have agricultural inputs and equipment, we have sanitary products. Let me see, what else do we have again? I have a few more like that. So, okay, we have disability aids, then we have transportation, that's basic transportation, and we have electric vehicles, inclusive of their parts. One of the reasons why they are bringing in the electric vehicles and some of the things, the campaign for the clean energy. I mean, is it green energy, clean energy? I think they're almost the same thing. So they are trying to reduce taxation on all of this so that it can propel people to do more of them, to buy more of electric vehicles. We want people to drive more of electric vehicles so that we can reduce emission. Yeah. So for the other part of it, which is the exempted, so we have exempted goods too. Exempted goods and services in Nigeria, and these ones are, sorry, please. Okay, so we have goods. Okay, these are basically goods that are consumed by the poor. Sorry, there's a mix up. Where's my? Okay, we have humanitarian goods. We have goods that are for humanitarian donor. Maybe you're donating goods and services, then they are exempted from value-added tax. Then we have more goods that are for the poor people. So these are brought in so that they can ameliorate the rate of poverty, and that helps to shift the burden of taxation from the poor a bit to the rich people. So having looked into that, I want to quickly talk about, okay, another thing that was added to my list, yes, is the mandatory e-invoicing and digital compliance. Okay, we have what we refer to as the FIRS MBS. The FIRS MBS is a new initiative. And one of the things that is not totally new, but the name is new and the drive is new. We've had this in the past, working little by little, but I think it's more serious now. It's a government initiative that is about reducing the possibility of evasion of taxes. So what this is about is the system is the FIRS MBS. FIRS itself comes to big organization. They've started that since June this year. We started that in June. Was it in June this year? And with companies that are 5 billion and above, those are the large tax payers. And the idea behind it is there's an installation of an application into the system that runs a particular organization. Let's take, for example, let me see, one of these outlets, ShopRite. ShopRite is kind of fizzling out, but let's use ShopRite. I'm trying to remember this other one. Now, ShopRite is a perfect example. If we have used ShopRite maybe in the last 2 years, I think about 2-3 years ago, once they give you your ticket, you see the logo of FIRS on it. Now, okay, yeah, somebody is saying Ebano. Now, Ebano, for example, let's use Ebano. Ebano gets the installation in their system. So while you go at the ticketing, the receipt that is being printed as you are purchasing from Ebano, for example, and the goods and the payments is being entered into the system, it automatically reflects on the FIRS own back end. So that's the idea of this FIRS MBS, mandatory e-invoicing. So it automatically comes in, and what that does is automatically every of your sales is trackable by the FIRS. So at the end of the day, there's no, you can't come and say, oh, you made maybe it's the payment, or maybe your income turnover was 5 billion and you want to under declare your turnover, then there's going to be issues, because automatically it's already, all your invoices can be accessed. So I remember I was at one of these big, should I say, is it a club or something like that, restaurants stroke lounge at Lekki this, I think 2 days ago. And I was having some discussion with the accountant, and he said, oh, they've come. But, you know, we're talking on a platonic level. And she was, you know what we're trying to do is we're going to be using 2 systems. One is going to be for FIRS. We're going to be stored their stuff. Then the other one is our own private account. I know the funny thing now is FIRS 2 is smart. This new tax bill was really, really bad. And that's one of the reasons that everybody is now a bit mandated to, every organization or every business is mandated to attach your tax identification number now to your company's business account. So when this happens, even there's no way to run. So even if you open UBA account with this, and maybe you want to use UBA account with FIRS, you want to be sneaking money into Fidelity Bank, then in the long run you'll be caught. So these are some of the things that came into the new tax law with respect to the FIRS MBS. So, and it cuts across every sector, both the business to customer, B2B, B2G, whichever one it is that we're trying to use. So a lot of companies have been onboarded, and more will be done coming into 2026. Now it's going to be focusing more on the lower, the middle, and the medium rather, and the small tax payers. So okay, thank you for that reminder. All right, so for the FIRS MBS, so we are going to be having a lot of that. So even if you have a small store, just prepare your mind. And I love what our first speaker said, and I will keep reiterating that. Let's be open. Let's and when I say be open, let's hire someone who can do this thing for us. Tax is not something that's it's hard. It's not so hard, but we need sometimes to just be with a professional who guide us through the process. I think I'll definitely advise that. Okay, so yeah. So let me see what I have here. Okay, I think the classification part, our first speaker dealt with that, and even the exemptions. So all I'll just say is let's put ourselves, but I think she didn't really deal with personal income tax. I thought I was going to be really speaking that, or maybe I didn't get that part. Maybe because I think I logged in late. So basically, because my time is almost up, let's just do what is mandated by the law. Like she said earlier too, trust me, the new tax act law is much favorable than what we've had in the past. Very, very, very much favorable that we've had in the past, either from the personal income tax system. Okay, yes, I was supposed to talk about capital gains tax. Sorry. So let me do that in the next 3 minutes that I have. And capital gains tax is a tax that is charged against the sales of an asset. Capital gains tax is the tax that is charged against the sales of an asset, or sales or transfer. Yeah, let me add the word transfer, because it's not every time that an asset is sold. So we've had this in the past. The only little things that came into it, the change that came into it was the inclusion of stocks stocks. So for example, you want to sell your stock, you buy the stock or shares of a company, a bank, whichever one, and you make profit, and now you want to sell it and you are making profit. That profit, you're going to pay tax on it. So let me know, I'm a part of the system, so I cannot say unfortunately. Fortunately, it was increased from company capital gains tax used to be 10%. It was increased from 10 to 30%. So don't worry, you still have a whole 70% to yourself. But 30% of that amount goes to the government, or whatever gain you have on any stock, any share, any business assets that we make sales of. So it has gone away from just the physical assets, qualifying capital expenditure that we used to have. Now it's more into the non-tangible assets. So all of that also comes under this new law of the capital gains tax. You have to make payments of the capital gains tax on either it's shares, it's stock. Once you sell, so for example, you buy a stock at, maybe you bought a pool, let's say you invested 10 million naira, and now you're going to sell at 15 million naira. Your profit is 5 million naira. 30% of that belongs to the federal government. So saying that the capital gains tax now cuts across all of these parts. So I think that's a bit of what I would love to share. So sorry, I'll tender my unreserved apology. Okay, unreserved apologies for not being able to share my slide. I'm so sorry. So thank you so much for listening. I hope I was able to add a little bit of value. Thank you so much, PwC.
Thank you so much, sir. It was such a great and insightful session. We're very grateful. Thank you so much for the session. I know I have a lot of questions, but I'm just going to start with the ones we already have in the chat box. So we have, I believe I'm just going to be reading the questions. Either of our speakers can respond to it. But so the first question says, is it true that folks without TIN, so I'm guessing the team, will not have access to their bank account from January? Sir, do you want to speak to that? And then the second question says, how can those who are not formally employed be affected? Can you hear me? Oh, sir, I think you're muted. Let me.
No, my sorry. Yes. Okay. I can hear you now.
Yes. So the person wants to know whether those without the TIN will not have access to because the news had been online that from January you won't have access to that has been what's been on social media. So the person wants to confirm if that is correct, and that if you're unemployed, if you're not formally employed, would you be affected? So yeah.
Okay, thank you for those questions. Number one, for the linking of the tax identification number, that is not yet an instruction from the government. Majorly, it's for businesses for now. Businesses, of course, you know that you cannot even register a business account without tax identification number.
Yeah.
So that's more for businesses. For the individual, I'm not sure that's yet. Because if it's going to be, definitely it will be in the news, and there will be, because I don't, there are a lot of essays now, so it's not a formal information yet. Okay. So let's just hope maybe before the end of the year we'll be able to know, because remember during BVN then we had to go queue and all of that. So yeah, we'll get over. So then for the second question, for those who are unemployed is a big word. There are a lot of people, I know a number of people who are unemployed, but they are in businesses. You post on WhatsApp, you get sales, you're doing drop shipping, all of that. So the question is, does money come into your account for business? Now, because some of these things, like I remember the chairman of the presidential whatever on the tax, Mr. Taiwo Yedele, he said something. And one of the things that I've already started doing it since I've been doing it before. When I want to send you money, even if I want to send my wife money for the house upkeep, I will put it there as remark, house upkeep. So one of the things I think we need to start doing is to tag money, so that you don't just have pool of funds in your account that you are not able to specifically with proof explain how they came. So if you're not employed, we're praying to God, nobody will be unemployed, especially as we get into the new year, in Jesus' name. But any money that is coming into your account, if you have money coming into your account, which I believe everybody has, either it's sent from charity, based on charity, or for a business purpose, let's get them tagged, so that in case, and trust me, one of the fear that has been out there, one of the canons of law, canons of taxation is economy. And you know what that economy means is that the tax agency will never pursue, they will never use resources to pursue a a person that cannot pay back that resources. I don't know, maybe you understand. So it's not like they now see you 1 million naira in somebody's account, they're not going to do that one. Nobody will even bother. Because they are still, just like we have in the bank, we have the HNIs in the bank, the high net worth individuals. So those are the first cash and the big ones. So that are sure that this one something will come out. So
yes.
I don't think that is, yeah.
Yes, I think that answers it. The next question says, I work in a cooperative firm. What's in this for us with the new tax reform under these categories? So I'm guessing the person wants to know how it affects their members, cooperative firm, the staff, and the money in our cooperative bank account.
Okay. For cooperative, let me see. Okay, majorly, cooperative is not a non-governmental organization. It's a business on its own. So cooperatives, they make profits. I've been part of a cooperative. So once you make profits, I think that does not have anything to do with the individual. The cooperative society itself is the one to be accountable for themselves. Okay. So it's, we have some amount of money deposited by our members. We invested this into this, we invested this into this, we invested this into this, which the investment themselves should be under a business environment, which I'll So at the end of the day, this is the profit. Nobody is taxing what you did not profit from. If there's profit, then let's subject it to tax. If there's no profit, just like, maybe they are investing into shares or something, then you know that you're not having anything to do with companies income tax or value added tax. Your business is with the capital gains tax if there is profit, which we always pray there is. So it's still more within the corporate tax system. So there's nothing to do with individual in that space.
Okay. I see that former speaker, Mrs. Yewande, raised her hand. I think she wants to make a comment. Please, can you unmute yourself?
Okay, I just wanted to also add context to what Mr. Adesanmi has said. So the fact that it's a cooperative firm does not mean that the staff will be treated differently from other members of other companies. So it's still going to be the same. I just wanted to, because I can see that she puts "we" the staff, and so I just wanted to mention that staff members will still be access to personal income, pay as you earn, and using the progressive rate that is there. I just wanted to add that to it.
Thank you very much. Thank you very much, Ma. The next question says, my small business ends below the threshold. Now I'm hearing I need to change my business name to LLC, or else I will still be taxed. Please clarify if that's true. If that's true, that I won't pay a dime. I think she's trying to say, I hope you get the question. I hope you understand the question, sir. I don't know, any of the speakers can take, maybe Mrs. Yewande wants to take this part.
Okay, so
I think she's saying that, yes, that does she needs to change her business name to LLC? Yes, we can.
Okay, so it depends on your business scale. So the law says that companies that earn that make a turnover of 100 million and below. And I can also see a question that says she read 50 million somewhere. Yes, it's 50 million in a particular act and 100 million in that act. So that's just a clash. That's one of the issues that we have with the new tax act. So 50 million in one and 100 million in another part of the act. So both technically, according to the law, are correct. So people have said quite a lot that, don't use business name and go and change it to LLC, not LLC, but I would say limited, LTD, limited liability company. So what I just want to say is this: it depends on your particular on your own circumstance. So the thing is that before this tax, the PIT rates are higher than before, and as a business name, you are access to PIT and not CIT. CIT says if you do less than 100 million, you will not pay tax. You will not pay CIT. Doesn't mean you will not pay tax. You will still pay VAT where you ought to pay VAT. Maybe you will not have, you will not be access to WHT because WHT is like a younger brother of CIT. But where you sell assets, you will still be access to CGT. So it's a function of only CIT. If you that 100 million exemption and the likes. But however, if your company is a business name, the business is not different from you as an individual. So if you have a small business, say Mercy Frank Enterprise, and you also have a salary job in 9 to 5, they will combine the two together and access you under PIT. So for instance, I didn't talk about PIT because I believe there is another speaker for that. That's why I didn't talk about it. So let me just speak a little about it. So under PIT, the rate now, if you earn less than 800,000 naira in a year, it is 0. And then the rate goes on and on and on. So the challenge with this rate is that it is going to eliminate the low income earners, and the medium income earners will pay a slightly reduced rate, and then the high income earners will pay more. 50 million and above will begin to pay 25%. So what the issue here is now that, so if you combine your salary and your business income together, are you going to pay more taxes? That's where you then begin to look at it and say, okay, what if I then go to limited liability? As a business name, you don't have so much to do in being compliant as a business name. But under CIT, there are a lot of compliance hurdles that you must scale. So these are things that people are not seeing. They're just looking at 100 million. Oh, you will not pay tax. So, but if you're on the business name, oh, you will pay tax. So go and move your business structure to a limited company. But are you ready for a limited company? The compliance hurdles, you have to VAT is there, you have to do monthly filings and a lot of other things that you have to do. Is your business ready to bear that extra cost? And the cost that you will bear and the income that you are trying to I said income, I mean tax rather. The tax that you are trying to reduce by moving from business name to CIT. If you do a cost benefit analysis, is it justified? Are you going to be on the winning side? Are you making a gain, or it's going to be a loss? So this is what I want you to look at. But and that's why we are saying that it's important that you have a tax advisor. It's not compulsory.
I thank you so much. I don't know whether it was Annette. I don't know whether our other speaker wanted to add something to it.
Oh, I think she has spoken a whole lot. The last part I wanted to advise before, but the last part she said, which is very true, which is doing a cost benefits analysis. Yes, so that you'll be able to know if to go ahead with it, with that system, or changing or not. Because truly, if you are going for the limited, you have cost. Even when you are not paying a dime, you still pay auditor for annual filing, you do all of that. But it's just about weighing the options. For me, I would advise going for the limited liability company, because one of this is it totally separates you from your business. I love that more from my own perspective. So because there's no place to run for under PIT. I wish I can be a company now, self, in my salary job, so that because before salary, company income tax is charged, there are still opportunities to do a few things here and there, like bringing expenses, anything you incur in that process, you bring it in. But under PIT, it's the system that tells you what they can allow or not. So just my own, but yes, as she said, I think it's better to do a cost benefit analysis than know which one will be the best option.
Thank you very much. The next question says, are small scale businesses going to have tax advisors as well? I think you've answered it already. Once you are making money, you would definitely need an advisor. And non-government organizations affected by this, I think is the same thing. Though it's not for profit, but I believe if there are certain things that are taxed, it's better to, just like you mentioned and Mr. Yewande mentioned, get a tax advisor that can properly advise, because we can't take all the questions anyway. So let's see, let me run another question says, do I have to open a TIN for my business? I already have a TIN for my personal income. So I guess the person is saying that, do you need a TIN for your business? I believe you already mentioned it when you started, that a business needs, for you to open an account, you need a TIN. So I think that already answers this. Your business needs a TIN. You need to have a TIN for your business. But I guess our question is, does she personally need? Okay, she said she already has one. So I believe, yes, you need to have one for your business, and one for your company and for yourself. Please expatiate more on input VAT. Does it mean if a company bought office equipment from a vendor, the company can claim input VAT? So I believe this is for you.
Okay. Input VAT, if a company bought office equipment from a vendor, okay, now here it is. Input VAT says that the company who bought from the vendor had already paid VAT to the vendor. Now, this is input VAT is very technical, and it's one of the reasons why every business organization has to be well registered and up to date with their documentations. So when you're buying anything from any business, you're supposed to buy with your tax identification number. Your company name, your tax identification number must be registered with them, so that the VAT you are paying to that company, the company is paying it on your behalf to FIRS. So once they are paying it, it's called withholding VAT. The vendor is charging you withholding VAT, just acting as an agent of the Federal Inland Revenue Service to collect the VAT from. So once you now use that in your own business engagement, you can still now write to. Now, the way Tax Promax, which is the system where most of these transactions are done on the platform of the Federal Inland Revenue, is that once you get on your dashboard on the Tax Promax, you can go to your is it clear? No, I want to remember the word now. I'll try to remember the particular. So once you get there, it's the same place where you can check your withholding credit notes or withholding tax credits. Yes, credits, that's the icon. You can also see in the same space if you have withholding value added tax. It just works the same way as withholding tax, just that this is for value added tax. So once it is there, in case you need to make any payment, it automatically takes it. Once you want to pay, you can now use that withholding VAT to pay for any value added tax that you have, because you already have. That's what we refer to as the input VAT. I don't know if that explains it. So the person pays it on your behalf. In case you need to pay any other thing, what the person has paid on your behalf is now used for you. That's what we refer to as input VAT. I don't know if that explains a bit, or is.
Yes, I think it does. So I think that answers the question that he has. The next one says, does a pensioner need a tax ID?
Do they tax? But yes, of course. I'm not sure you can be a pensioner if you did not have tax ID in the first place. How did you even work? How did you become a pensioner? Definitely, you can't become a pensioner without the tax ID. So you must have had when you work. Yeah.
It has been overtaken by events. You must have had one before you
yes.
become a pensioner. Yeah, okay. Yes. I think the next question, I think you must have answered it. The person said, my salary is not up to 80,000 a month. Also fear that the money in the bank will be taxed. I think you've answered that. If you're not earning up to 800 If it's 800
Yes,
and
you are
below,
going
you
to
would
be
not.
taxed.
Sorry, what
If
did
you're
you say, sir?
at 80,000 naira, you'll be taxed.
Okay, to be more than the
Yeah,
800,000 per
because
year.
already above the minimum, which is 800,000 naira annual.
Okay.
Yeah.
You see, this is why the professional have to. I have to leave it to say. So I think you already answered that there's no directive from the government yet in terms of personal accounts, and probably it's companies that this will relate to. I'm trying to see the next question. The next question is that the person needs clarification that when the slide was being shared by, I believe, Mrs. Yewande, she had mentioned that small company is defined by 50 million, annual turnover of 50 million. However, in the act, it says 50 million, but in her slides, she says 100 million. She needs clarification. I don't know whether Mrs. Yewande is still.
Yes, I already clarified that part that she's right.
Okay.
So there is a conflict between the NTA and the NTAA. So one states 50 million, and another states 100 million. So we are waiting for the FRS to actually, when they release a circular about that, they would actually clarify which one we should stand with. But because 100 million is more than 50, so most of us are choosing to stand with 100 million. So, but if you say 50, if you say 100, it's fine, but we'll choose 100 million because 100 million is more, right? So,
So the next question says, will pensions be so the question says, will pensions, okay, let me just read it. Hope they won't charge my pension, especially when I want to withdraw it. So when you want to, let's say you have a pension account, will you have to pay tax?
No, pension is not chargeable to tax. Pension is not chargeable to tax.
So this question says, I think it's for people in the diaspora, will you be taxed to income existing in your savings account if you do not live or work in Nigeria?
nobody would charge. Okay.
So the person is asking that would you be taxed to income, so maybe money in your account, savings account, if you don't live or work in Nigeria?
Okay, so if you keep the money in your account, it's your savings. The only taxes you will see will be maybe VAT when you make transfers and all of those. But as long as it is in your personal name, it's not an account that you use for business. No.
Okay, all right. So another question here says,
Oh,
as
then
a
let me
drop
make
shipper.
this, please. Let me just mention this. So if in that account you do something like a fixed deposit, you will definitely pay WAT of 10%, which is deducted at source. So that's the kind of tax that you would see on that account, and it's everybody. So whether you live in Nigeria or not, as long as you have a fixed deposit investment in that account in Nigeria, there will be a WHT of 10% that will be withheld. So that's basically the only tax that you would see in your account.
Okay, thank you very much, Ma. This person is asking a question. As a drop shipper, what would you advise concerning business registration? So I guess the person wants to know what kind of business should the person register a business name, a company? That's the person's question.
Okay, so I would advise that, like I said, it depends. It depends. So, because digital businesses too is now a major priority for the government, and that's why you would see that they are mentioning things like crypto and all of that. So, digital business is also there as long as you use an account, but I would say it is not a yes or no answer, or it's not a use business name or use limited liability company. So it depends on your business circumstance. So how much are you doing in turnover on your business name? are you willing to be able to put so much structure if you want to do a limited liability? Are you envisaging that if you even register the limited liability, you're going to go into full-blown business in the foreseeable future? So these are questions that she needs to answer. But if it's something that she just does on the side, aside also, and it's not something that is bringing in so much money, in my own opinion, and based on the limited information that I have, I would say a business name. So if it's not so much, she will still be in the range of middle income. But if she then sees that I envisage I want to do this more, I want to start going to China by myself and bringing in these goods, I want to do it, then I would say just do a limited liability company now. So that's just yes,
Right. Thank you very much. And the last question I have here is, how are registered non-profits affected by this new law? Can you take, I think that's for you, sir.
Okay, registered non-profits. Registered non-profits are they've always been exempted from taxation. Once it's non-profits, you're not paying, and that has not changed. The only thing is to keep your books. That's all. And do the recommended filings so that you don't have any issue. So there's no tax liability once you are still in the purview of the non-governmental organization.
Thank you very much. And on this note, I just want to say big thank you to our speakers, and I will be handing over to my EC to close this session. On behalf of the Praying Women's Circle Legal and Policy team, I just want to say thank you to our speakers. Thank you very much. So over to you, Dr. D.
Hello. Yes. Gosh, can you all hear me?
Yes, we can hear you.
Amazing. Sorry, I think I'm going to have my light a bit better. Yes, thank you so much to our wonderful speakers. I was just thinking, and I said, in whatever part of the world you're in, to have tax is such a complicated subject. And honestly, God has blessed people with specific talents and specific understanding in being able to break it down in such simple language that even Joe Public on the street understands. So I just want to say a very, very mahusive, big thank you to our wonderful speakers today, Mrs. Yewande Fowosere, who's one of us, and Mr. Clement Adesanmi. Thank you so much. You've taken out of your time. I'm sure you could be doing something else on a Saturday evening, but you've come, you've fed us, you've watered us, and we're so grateful. Just as I was listening, what just came to mind is tax is not a pretty subject. I mean, whenever the tax man comes, whenever you see that on your payslip, you're like, and I don't know about you, but if you think about it, thinking, oh my gosh, how much I could be earning every month if I wasn't paying that tax. Or, if you want to move out to Dubai, apparently in Dubai, you pay zero tax. So if you're earning 80 grand a year or 80,000 naira a month, you're taking 80,000 naira a month, or, however. But the Bible does say, give to Caesar what is Caesar's. And we, for you to prosper in the land, that whatever land God has called you to, you have to do the right thing. As Christians, we're the standard, we I'm sure a lot. I felt as well. A lot of us on this call have probably been getting nudgings from the Holy Spirit that you need to get your tax affairs in order. So this has been pivotal in helping us. So I just want to say a very, very big thank you again. We're so grateful. Thank you. God bless you. God reward you. I pray that from your coming here, there'll be a tangible testimony attached to your coming here. To all our speakers, and of course, thank you. So, ladies, let's just say a very big thank you on the chats. Let's this is stuff you would pay good money for, just to understand. And I hope we'll have the pleasure of welcoming you again. Just to say that because this is such a big topic, it carries on again next week, but this time at a slightly later time of 8 p.m. to 9:30 p.m. So we look forward to welcoming you again. We're going to have 2 new speakers, and you can tell from today's quality, I'm sure you don't want to miss it, and you would want to invite other people as well. And again, this is PwC. If you're And if you're not a member, we are open to accepting new members. So please send us a message. You can find us on Instagram, Praying Women Circle, or and you can send us a DM and we'll let you know about joining. So before I go, I just want us to pray for our speakers, and I also want us to just pray over our lives. You know, it's one thing to, even though ignorance is not a defense, now that you know, there's even less of a defense. Okay, so I just want us to pray over our speakers, and also pray that even if it costs us something, in quotes, and no one else seems to be doing the right thing, that the Lord will minister to our spirit, because our standard is different, to always do the right thing. Especially, you know, tax can be really funny, but yeah, we're just going to pray. So if it's all right with you, if you can unmute, please unmute, and let's just pray, speak a word. Lord, I just want us to say thank you to God for the speakers that He's blessed us with this evening, that the Lord will bless them, the Lord will replenish them, the Lord will take them to heights beyond their wildest imagination, that as they have watered and honored our invitation, that the Lord will honor them in the name of Jesus. That, you know, in areas where other people at their level struggle to have understanding, the Lord will give them divine insight and wisdom, so they become the voice, the go-to. Anyone has a tax issue, like, oh, have you spoken to Yewande? Have you spoken to Clement? Because the Lord will give them extraordinary wisdom, like He gave to Daniel, Meshach, Shadrach, and Abednego, that they stand out. They are outstanding. We pray a PWC blessing, because we know the Lord, we're a fertile ground where people sow into us, and of course they reap great rewards. So we just say thank you for these amazing vessels, Lord Jesus, that you have used to bless us, to break things down for them. May you reward them. And Lord, for us as the participants, as the listeners, Lord, whatever nudging and whatever you're stirring in our hearts, Lord Jesus, help us to always remember that the world is not our standard, that you are our standard. That, Lord, in the mighty name of Jesus, even if it costs us something, even if it means whatever sacrifice it means, help us to do the right thing by your standard, Lord Jesus, and help us that, Lord, the things that we've heard today will not stand against us, but instead it will launch us into more and better. And Lord, we commit next week as well into your holy hands. Thank you for taking absolute control. In Jesus' mighty name, amen. Massive thank you again to our participants, everyone who's come, and again to our amazing speakers. God bless you. We appreciate you. And yes, we look forward to welcoming you again. You know, at this rate, it might be that people, like, come January, people are like, actually, can we have you back? And I hope you will honor us if that be the case. God bless you. Thank you so much. Thank you. God bless.
Thank you, Mom. Thank you, Mom. Thank you, everyone.
Thank you, everyone. Thank you so much.
Thank you, Yewande. Thank you.
Thank you.
Thank you. Thank you.
Thank you.
Thank you.
Bye.
Thank you. Good night and bye. God bless.
Good night. Bye.
Good night. Good night, everybody, and bye.
Thank you.
Bye.
Thank you so much. Thank you. Yeah.
Watermelon.